Hello everyone, welcome back to Unday Radar Talks. Applied Digital shares surged 65.7% on Thursday as the company announced it had secured $160 million in strategic financing to advance its transformative accelerated computing and AI infrastructure. The surge in the stock price that day caused its trading volume to surge to nearly $150 million. Which means that the capital that had previously entered the market sold a lot of chips. But a lot of capital also entered the market, so the stock price increased a lot of positions between $4.35 and $5.40. But the closing price remained at a high level, and it seems that the stock's rise has not yet ended. In fact, before September 5th, the stock had accumulated a lot of positions at the $4 level, and then the stock price squatted and took off, which led to a large amount of capital selling at the $4 level. However, a large amount of funds entered the market to take over the chips, so that the stock price did not fall significantly after the crazy sell-off, but remained at a relatively high level, which indicates that the stock price may rise further later. Let's take a look at the 15-minute chart of the stock. We can see that the stock price of the stock continued to fall from August 29th to September 4th, but its daily trading volume increased significantly during this period, which reflects that a large amount of capital has begun to deploy the stock during this period. However, the performance of the stock on September 5th was not so mild. The sharp fluctuations in the stock price in the morning trading reflect the intensity of the battle between bulls and bears, because the surge in stock prices will inevitably lead to a large amount of profit-making capital selling. But we also see that the bulls strongly took over the selling of bears and maintained the stock price at a certain height. This is a positive signal, but the next pressure is given to the taking over capital, because the stock price needs to rise further to open up a certain profit margin. Let's take a look at the capital flow data of the stock. We can see that the net capital inflow of the stock on September 5th was $1.39 million, but this data was not much higher than the previous two trading days. But the trading volume on that day was several times that of the previous two trading days, which is consistent with the previous analysis, because a large amount of capital withdrew from the market and a large amount of capital flowed into the market, so the difference between the two amounts was not that large. Let's take a look at the market position distribution data of the stock. We can see that the stock has a large number of positions distributed between $4 and $5.40, but the distribution is not concentrated, so even if the stock price fails to rise further, it should consolidate in this range. But I am still bullish on the stock, on the grounds that the capital that flowed into the market before the stock price skyrocketed has not been completely withdrawn. In addition, the capital that took over the chips on September 5th needs to further push up the stock price before it can exit with profits. Of course, this does not mean that the stock price will be pushed to a higher level immediately. I set a target price range, which is between $6 and $6.50. This major positive news of the company may not cause its stock price to enter a downward trend at just $5.40, but as mentioned earlier, the chips sold by short sellers may take time to digest, and if there is a large amount of short selling again, it may cause the stock price to be forced to consolidate at a high level. But I still think that after the consolidation is over, the stock price will be pushed up to $6 or above. Okay, guys, this is my price prediction for Applied Digital stock. Thank you for watching. If you like my analysis, please click the subscribe button and give me a thumbs up. I will bring you more latest price predictions for popular stocks in the future. See you in the next video.